today's video, I'm having a look at equities in the US. We're also going to talk about stimulus and what we've heard from Fed Powell overnight, and a little bit on bonds. Hello and welcome to another ACY Securities daily report video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, the first thing on the cards for us to have a look at today is US equities. We've seen already that they're starting to improve after we've heard from Fed Powell in the overnight US session. Now, the chart behind me is the S&P 500, and we can see whilst it hasn't erased all of its negative losses, it has ended up coming back up again and giving us some nice little signals on the way there as well. Now, for the time being, the Nasdaq is still down, and we have seen further evidence of problems for Elon Musk, who has had also Tesla fall in value since his comments over the weekend. Naturally, because Tesla is holding $1.5 billion worth of Bitcoin, it's erased its gains that it made for so far this year. Now, looking at what's gone on at the Fed. So last night we heard from Fed Chair Jerome Powell, or Jerry Powell, and it's basically a case of no news is news, and it is good news to say at the very least. He's signaled that tapering is not going to occur at any stage soon. They're still wanting to reach maximum employment and obviously fostering inflation to be above 2% at some stage. Now, he has expressed that he has some expectations that by the end of this year, we should see the economy move back to a more normal way, just like we saw in 2019 with normal behavior and market functions. Now, currently, the Fed program is purchasing $120 billion per month. Those include $80 billion towards the Treasury side of things, and we've also got $40 billion going towards bonds as well. Now, there's not really been any change to this dovish stance that they've had just yet, and I'm hoping that it stays that way for some time to come. We do have the forward guidance that they aren't anticipating any changes on the tapering side for at least 3 years, but we knew that before. And with the bonds rising up in value, it sort of reflected a bit of an idea that perhaps inflation would come a little bit quicker, and that would also mean we'd end up with a bit of a taper tantrum starting to come. Now, in this instance, he has actually stated that he sees bonds reflecting a little bit of market optimism in a way. Now, when we see it that in this circumstance, it means that we're actually starting to see that the other signals of the economy, which has not been growing with the rest of it, we have an uneven distribution of growth, that this move actually helps push those numbers up, gives a little bit more inflation into them, and of course, helps bring up some of the things like cyclicals, and of course, any of those businesses and companies that didn't do well during the pandemic from stimulus. Now, a quote from him in last night's statement was, "Developments point to an improved outlook for later this year. In particular, ongoing progress in vaccinations should help speed the return to normal activities." And that's that big point I was trying to make just before about what he said in the statement, that he anticipates more normalized economy action happening towards the end of this year. And that means that there's likely going to be probably another stimulus package beyond the one that we're getting now from the Biden administration. Now, moving on to the bonds and FX volatility side of things. When we think about bonds, we don't usually anticipate the idea of FX volatility. They do go hand in hand, however. So if you're not familiar with the bond side of the equation, then perhaps you might need to do a little bit of research. But to give you a little bit of an idea on what goes on in that scenario, there's $1.9 trillion of a stimulus package on the way right now. It's potentially by the end of the year, we could see ourselves with another stimulus package. I'm estimating that in total this year, we'll probably end up seeing about $3 trillion in fiscal stimulus to try and support the economy. Now, because of that, we haven't even seen that stimulus package coming yet, but yields are starting to rise on bonds before it's even gotten here. Once it gets here, we're anticipating it going up a little bit further. This means that we could potentially see the 10-year treasuries get a plausible 2% rate by the time it's in the second quarter. So, now, whilst we've only got the second quarter not that far away, I'm thinking closer towards the end of it rather than the start of it, but nonetheless, that's where I'm sort of guesstimating on where I think things are going to go if yields continue to rise. Now, how does that actually happen and what goes on with the stimulus? Well, last time when we saw stimulus actually come out, it meant that all the money kind of rolled through the financial market as opposed to the actual economy. This time round, we're hoping it'll be the other way around. As opposed to going to the financial market, propping up things like those tech firms and everything that has done really, really well throughout the pandemic, we're hoping it actually goes into the ground, goes to the material sectors, it goes to the services sectors, it goes to obviously those ones that have been badly damaged or not generated much in way of profit throughout the last year. Now, if this does continue to happen, that means that rising rates, rising yields give stronger growth and stronger inflation predictors. Now, this also brings currency volatility. Now, if you want to have a look at a couple of different currencies to try and see where the volatility starts to increase, I think the best place to look is actually the yen. It generally has a low implied volatility level, and should we see rates starting to rise, we should actually start to see a little bit more whipsawing behavior occurring in the yen on moves. This means more opportunity for those of us out there who do trade currency markets and FX. Now, moving on from today's video, we're having a look at the news ahead of today. We've got monetary policy statements coming out from the RBNZ, or the Reserve Bank of New Zealand. We're also going to be seeing some news out of the Bank of Japan with CPI figures. We've got from then on more monetary policy reports later tonight in the London session. And we also have Fed Powell speaking again at about 2 a.m. Australian Eastern Standard Time. So keep an eye on those. You've got the New Zealand, the pound, and the yen, plus the US dollar, all getting some reasonable impact news for this evening. Now, if you do have any questions on today's video, perhaps one of my webinars or something else, feel free to get in contact with me via any of the social media channels above that you see behind, or even comment on this page itself. Now, no less, don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.